Welcome back to The Explainer. So, you've probably heard the buzz, right? People talking about earning some pretty serious returns on their crypto, the kind of stuff that makes a traditional bank account look like a piggy bank. Well, a lot of that action is happening in a fascinating new space called Decentralized Finance, or DeFi. Today, we're going to peel back the curtain, break down exactly what it is, and see how people are putting their digital money to work. All right, so here's the game plan for today. First, we need to understand the problem DeFi is trying to fix with old school banking. Then we'll get into what DeFi actually is. After that, we'll look at 3 of the most popular ways people are earning with it. And finally, we'll wrap it all up by talking about why this is so much bigger than just making a quick buck. Okay, so before we can really appreciate just how much of a game changer DeFi is, we have to take a quick look at the system it's up against, traditional finance. This is the way we've been managing money for, well, centuries. And boom, this slide just lays it all out, doesn't it? On one side, you've got the world we all know. Banks in control, transactions that can take days, and savings accounts that earn you, well, basically nothing. And on the other side, that's DeFi. The promise is that you're in control, things happen instantly, and the potential for better returns is way, way higher. So that leads us right to the million-dollar question. What is this new way of doing things? What is DeFi, really? At its heart, DeFi is basically this whole new financial world built on the blockchain. The big idea, the absolute core of it, is to take all the things we do with money, lending, borrowing, trading, and rebuild them from the ground up without the banks and brokers taking a cut in the middle. And this, right here, this is the secret sauce. See, instead of a bank, DeFi runs on something called smart contracts. The best way to think about a smart contract is like a vending machine with superpowers. You put your crypto in, you press the button for what you want, and bam, it automatically gives it to you. There's no cashier, no one to ask for permission, it just works. That's how DeFi connects people directly, person to person. So what does getting rid of the middleman really mean for you? Well, for starters, you don't need a bank account. Anyone, anywhere with an internet connection can jump in. It means you, and only you, are in control of your funds. And maybe the craziest part? Every single transaction is recorded on the blockchain for anyone to see. That's a level of transparency you just don't find in the old system.
All right, enough with the theory, right? Let's get to the good part. How are people actually using this stuff to make their crypto work for them? We're going to walk through 3 of the biggest ways right now.
So the first way, and probably the easiest way to dip your toes in, is through lending. It's a concept you already know. You lend out your money and you earn interest. The big difference here is you're not lending to a bank. You're lending your crypto to other users through code. And this analogy is spot on. It really is like a savings account, but on steroids. You put your crypto into a big digital pool, and people who want to borrow can take from that pool. As they pay back their loan with interest, you, as a lender to the pool, get a cut of that interest. Simple as that. And look, the potential difference in what you can earn is, well, it's pretty wild. Your bank might be giving you, 0.1%? In DeFi, seeing numbers like this isn't out of the ordinary. A huge reason is that there's no bank taking a giant slice of the pie. But, and this is super important, these rates aren't guaranteed. They change all the time, and with higher potential rewards, always comes higher risk. Okay, so if you're feeling a little more adventurous and you're looking for even higher returns, let's talk about leveling up to something called yield farming. You might also hear it called liquidity providing. Think of it this way. You're basically becoming a tiny co-owner of a currency exchange. You take 2 different crypto tokens, say Ethereum and a stable coin, and you deposit them together into a pool. Now, whenever someone wants to trade between those 2 tokens, they use your pool and you get a small piece of the trading fee. Plus, a lot of these platforms will throw in bonus tokens just for helping out. This chart, wow, it really shows you the whole picture, doesn't it? You go from traditional savings to DeFi lending to something more hands-on like yield farming, and you can see how the potential rewards can really stack up. But, and this is a big but, you have to remember that risk climbs right alongside it. You've got risks like bugs in the code or something called impermanent loss that you need to understand. All right, our third method is a little different. It's called staking. This one isn't so much about lending or trading. It's about becoming an active participant in securing the network itself. The best way to think about staking is like being an active shareholder who gets paid for helping the company run. You lock up some of your tokens as a sort of security deposit. By doing that, you get to help validate transactions and keep the network honest. And for doing that important job, the network rewards you with brand new tokens.
Okay, so we've talked about how to make some money, which is cool. But the truth is, this whole DeFi thing is about so much more than that. We need to zoom out for a second and think about the big picture, because this could really change things.
And this quote, this just nails it. This is the heart and soul of the entire movement. It's not just about new technology. It's a philosophical shift. It's about taking power away from these huge centralized institutions and giving it back to you, the individual.
So when you strip it all away, what's left? What are the big ideas here? It's control. The idea that you can be your own bank. It's accessibility, a global system that doesn't ask for permission. It's transparency, where everything happens out in the open. And it's efficiency, using code to make things faster and cheaper for everyone. And that, of course, brings us to the ultimate question. Is this the future of finance? Look, it's still early days, and there are absolutely risks involved. But DeFi is offering a really powerful new vision for what our financial system could be, one that's more open, fair, and puts you in the driver's seat. The real question might not be if it changes finance, but how profoundly it's going to change our entire relationship with money.